The final panel for today we will have on this stage is called Navigating the Chill. Is VC heading into a winter session? Thing is that once warm venture capital environment is feeling a bit cold lately. And we dive deep to understand the reasons behind this VC shift. And moreover, we explore how startups can not only survive, but capitalize on these changing winds. So what strategies can they employ to thrive? So this will be a 100% pure VC panel. I'm very happy. There are a few well, our friends and partners here, also coming all the way from Lithuania and Finland and also Latvia, of course. So I will invite the panelists to come on stage.
The topic is clear. It's super hard to fundraise, super hard already to build a startup. Now fundraising is so hard. We'll be asking VCs, why are they not giving more money? And more easily to startups, making startup building harder than it has to be. So what's up? If you'll have questions, please let's make it more interactive, lively. Grill those guys, grill me as well. But let's get folks up the stage. You have everyone there. I think we'll keep it simple. Let's just come up and line up by the names and sit down and get the discussion going. Yeah, let's line it up.
Wow, we are so far away from each other.
So, let's kick it off. So, the fundraising market is shit. What has happened? Is it the bottom? Is it going to be the new normal? Or is it just a hiccup? Let's just make a diagnosis. What's going on? Guys, who wants to start?
That's how tech investor works with tech. Always nice to be the first one. Yeah, it's not the easiest fundraising market, but I would not say it's actually difficult. Sorry to say. So to be the pessimist, the winter is still coming. And to be even more pessimist, we were fooled by the couple of last years. So we had exceptionally easy time to raise funding. And we forgot what it normally is. So if you have heard the stories from the founders raised in 2020, 2021, even early 2022, that was not the normal market. Now we are maybe seeing the normal market. Unfortunately, tomorrow we're going to see the bad market. Why is that? At the moment, it's relatively okay for startups to raise funding. It's mission impossible for most of the VCs to raise funding. Public market is down, real estate is down, bonds is down. Only asset class that is not down is venture capital, meaning that all the institutional investors are over-allocated to VC. And nobody's doing exits, the market is frozen. So not even the VC investors getting money out of the VC investment, so they cannot recycle the capital. This translates that this year, next year, there will be less VC capital closed by the VCs than what they are allocating. So yeah, the winter will come.
Well, just to put some weight on what you're saying, Reima, you are a GP of an Estonian fund, Trind VC. You are angel turned VC investor focusing on B2B SaaS and consumer, right?
Yes, all over Europe, seed-based companies with a consumer or community component.
Good. Others?
Can I continue?
Let's do it.
Okay. Raimonds gave us a very strict guidelines what we can talk about and what not. So taking a look in the phone. Also, it's up to you to decide what I'm saying seriously and what not. The question was about the winter, when the winter will start. It's already started. I catched cold, so that's why I came just today, just now, not in the morning. If we talk about the Buildit, Buildit.lv, so this is the web page. So in our case, the winter will start on end of December, because then our investment period is over. Until that, I have almost 1 million to deploy. I have to find startups. So is this a winter or not? Currently not, but starting from January, the winter will be here. I will not be too much serious. So this is a comment from my side.
If I may add to that, I actually agree. First of all, we have been super actively investing through the COVID, through the political and economical turbulence of the past few years, and we are actually in the halfway of investing period of our third fund. So we've actually been more active than ever before. And good businesses find funding.
Okay, so my name is Arvydas. Pleasure to meet you. I'm Joro Baraliukas from Lithuania, and I'm running a private equity venture capital fund called Practica Capital. So we will be investing from 80 million euro fund, a seed fund dedicated for Baltics. And especially we are looking at Latvia, where we were not so active, so at least 15 million euro deployed in Latvia. So Matīss, 1 million, okay. We want to very actively invest, and I think capital is lacking. We are generalists, so we invest in good teams across all sector agnostic. On the topic, right? So I think it's a point of view. I don't think there's anything wrong with fundraising market, and I don't think there's any winter. I think it's the best environment, the best time. Nothing has changed. Where does it come from? From the point of view that capital is infinite. Capital is really infinite. What's changing is the distribution, how it's done. So it was kind of a lot of free money. Imagine there were 700 new VCs opened up since 2020, right? It's 50% more than it used to be. They all got funded. They all went in and invested opportunistically. Now the market is choking this shit out of the system, right? So later stage companies that had no viable business models are down. They're not even raising. So the statistics of investment is suppressed because we see like amounts raised and so on. It's very low, but it's very low because no one is raising or doing bridge rounds or reducing burn rate and so on to survive, to be able to raise, then the market recovers. What is happening with LP markets, with investors to the venture capital funds? Okay, let's put it that way. $3 of demand from GPs, from VCs, are chasing $1 of demand from LPs, from investors. So VCs are underwater, especially the later stage guys, right? So the later stage guys, let's say, that invested in Tiger, for example, Tiger, right? Not Index, but Insight Partners. All the 20 billion Mohican funds are 60% down from on their last vintage fund. So they cannot hardly raise the new fund. So this number of or amount of capital is the same. They are chasing a bit different opportunities, and markets choking out the opportunistic investors and the non-fundable business models, non-reliable business models. Fundamentally, what comes to Baltic states, nothing has changed. We are early stage, pre-seed, seed. The activity there did not drop a single point, right? Amounts raised, very similar. Drawdown from peak valuations from 15 million to 13 million pre-money. Amounts raised, minus 20%. It's super healthy, super active, it's fastest to adopt. So in my opinion, it is opportunity to act. And the one thing that I would say, and the most important thing, is only good, sustainable VCs are getting funded. So if you speak with a fund that has money, like all of us here, right, means these are guys that are actually trusted by LPs. And there's a lot of capital available in the Baltics, and I hope in Latvia, with the new programs, is going to be much more capital available. Look, we are here, we are investing, all of us, so it means that you have capital, nothing changed. It's just like keep pushing, and there's no market, no winter, nothing like that. Only later stage guys are in trouble, but this is not our problem.
Arvydas is saying no winter, so go fundraise. Reima, do you agree?
As I said at the beginning, it's still a couple of good years. It will become I'm expecting it to become tougher and looking at how the funds are closing. But as said, here's, I don't know, there's over 100 million unallocated in the States, so I think it's still enough for Latvia if you take all of that. But one thing I actually disagree a bit is that, yes, the fundraising has changed. Still a year ago, as a VC, you can bet that the company will raise that next funding. So as long as the company gets 12 to 18 months runway and hit the milestones, it will raise. Now it's, at least we are more careful about that. We would prefer to see 18 to 24 months runway. We would love to see that there is a plan B to turn the company somehow cash flow neutral, or at least somehow the company can control the burn. And finally, we prefer actually bigger rounds with other VCs. And this actually sort of seems to be leading to a bit schizophrenic situation. This means that we're going to invest in less startups, but more money into those less startups. So that, of course, pushes the valuations up. So next year, when Olga is showing the statistics, probably the valuation goes up, but the number of companies getting funded gets down. So great teams, great founders, raising great rounds is great opportunity, but some of you, it's very difficult to fundraise.
And if I may add to that, our team met this summer 15 London VCs and asked them what's going on. And the message was pretty clear. The later stage VCs are cautious. They are looking around, waiting for positive indications. However, they are still investing, but only the ones with the best growth metrics. Some of them are still expecting the aggressive 3x ARR growth, but some of them are more conservative, maybe cash flow neutrality or looking at the healthy growth numbers, but they are still investing. However, on the earlier stage, we are super active, and actually there's indications that even the later stage funds are investing on earlier stage now. So actually you're in a good place now.
Matīss, you had one.
I just wanted to reflect what Arvydas said, that next week I will have the meetings with LPs, and I was a little bit worried how many LPs are sitting here and how open I can be. But if they are here, so they heard that Arvydas said everything is okay. So because I'm going to fundraise, and if he would be talking only about negative things, then imagine how could I convince my investors to put money in my new fund. So it looks everything is okay. So thank you, Arvydas.
Yeah, and I will just add one point. Look, don't overcomplicate shit, okay? Like whatever happening at Series D funds is not your problem. Your problem is to survive to the next day, right? And at Practica, we have this mentality. It's going to sound like a joke, but this is our mentality. So we are not looking for unicorns. We're looking for cockroaches, right? Because unicorn is a mythical creature that kind of survives in glitter and the spotlight, but what really matters to find a team that, you take the head off, it survives for a month, it grows it back. You put it in the space, it floats around, it's able to survive. And when you think about, all these US, UK companies, their burn rate is insane. At Baltics, we are the most capital efficient next to Nordics, if I think even better, right? So we do have insane unfair advantage compared to all the other startups. And that's why many VCs are coming here looking, okay, so you reached 100K MRR with how much? 2 million euro investment? How is that possible? So I think, we are excellent cockroach market here in Baltic states, Latvia, Lithuania especially. Estonians are, sadly, but they are a bit more expensive, I would say, right? So just think about that, just survive to the next day, grow your head back, just take whatever capital is available and excel at these markets where everyone is frozen. You should act.
Building on cockroaches, good point. I think we can only add. Inconclusive. It's winter, it's summer. We have not really concluded here. Seems like business as usual. From BADideas.fund perspective, we are a community of 150 startup builders that have scaled companies that have collectively raised $13 billion. And we have invested over this last, a little bit over a year, in 16 companies, 1.8 million euros. So we've been super active. 4 of them actually in Latvia, Latvian teams. That is Baltics, that is Ukraine, all over Central Eastern Europe. And just to add to what you are saying, yes, we are very active. And if we just zoom a bit out of Latvia, Baltics, let's look at CEE. CEE, for example, in Central Eastern Europe, in the context of whole Europe, over the last 5 years, the valuations, or rather the startup values, have increased the highest for Central Eastern Europe compared to any other European region. The funding has increased also the fastest for Central Eastern Europe compared to any other region. Yet the funding amounts have just been so much lagging behind any other region. So given the success stories we have already seen over the last decade across Central Eastern Europe, do you agree that Central Eastern Europe is actually going to blow up positively with more cockroaches to come, and maybe unicorns?
No, I believe that it's an area capable of producing both. By the way, as a co-investor of Practica, don't worry, they don't bite the heads off every day from the founders. At least I've seen one who's surviving with the head intact. But one thing about this blow-up, quote-unquote, on the valuation, at the same time happened this shift with many VCs. So I'm based in Finland myself, and few years ago, the Finnish VCs, 5 years ago, they only invested in Finland, or if they were international, they invested in Nordics. Then they start to look into new Nordics or Nordics and Baltics, and now they are looking into CEE. And same happened with many Nordic, Western European funds, that CEE was sort of discovered as a startup ecosystem. So the same kind of boost that happened, it's sort of, there is already like the late stage money in, so same kind of boost is difficult to see, but as the areas possibilities and qualities of generating high-quality startups, I would say that it's a really interesting market for us.
Which is a practical tip, right? You don't fundraise from a Latvian VC. You fundraise from all over the region. So you don't put all your bets on just one potential date. You just make hundreds of dates and see what just clicks.
And even in seed stage, it's not like we invest all over Europe. We have done deals from Finland to Sweden, from Cyprus to Germany. And I would say that even seed stage, most of the fund has a really broad geographic scope. But what is more important is that the case fits the thesis. So it's the right vertical, it's the right business model, whatever is the thesis. It's a bit different in pre-seed, where you're betting, basically bad ideas, you're betting on bad ideas. So you're betting on the team. You need to meet the team. If it's on the other side of the world, it's more difficult.
Exactly. Janiina?
Yeah, actually, you're right at the point. So, because if you send messages to 200 VCs, you might get 200 yeses. And who has time for that? You're going to sit 2 months in meetings talking to VCs who might not fit your strategy. So when you talk to VCs, choose them, select them, read their strategy. They all tell what they are investing in on their website, usually with big letters on the front page. Go to Crunchbase and figure out whether they've made investments within the last 12 months. If not, you're probably not going to be the first one. Don't waste your time on that. So have the meaningful conversations and, like I said, look outside your backyard.
Thank you, Janiina. We should switch now. This is a nice segue to the next topic. Then clearly something has changed in the market. How should startups change how they pitch, how they should adapt their fundraising strategy, and whether that's storytelling? What are you seeing when startups pitch? What are you looking at that is important? What is less important?
So maybe a bit of a continuation from last topic, because I think it's related. So statistics in Europe suggest that 70% of capital under 2 million rounds is provided by local investors. So when we say no, regional, whatever, it does not work, okay? So even like Latvia, Estonia, and Lithuania, we have only 10% of capital cross-border investment. So it's still completely locally dominated market at early stage, pre-seed, seed. At kind of later stage, of course, we rely on let's say, bigger investors, regional or global investors that could come in, 5 million Series A basically cannot be led by local guys. It's very clear why, right? So at early stage, you do rely on your domestic investors. Right now, we do see like a lot of tourist capital. I call this remaining 30% tourist capital. It's like, say, smaller funds, regional funds. They are not top tier, but they probably specialize somewhere, and they come in here, and the relationship you have to build is very personal. And probably like, number game doesn't work in Baltic states. So you still have to basically, your 10 local funds, 12 local funds that you have to build relationship. And then you do have a lot of like tourist capital coming in that is also going to be rely a lot on the signals from local funds, because everyone talks, right? Before investing, they will reach out to the local funds. What do you think about that? What do you think? Let's syndicate, let's do something together. So ultimately, as a founder, you have to be rooted in the local ecosystem, and you have to make sure you do not fuck up relationship with your local guys, right? And that's its meaning, probably one thing. Second thing is that if you're raising, you never raise. That is kind of probably the advice I have to say. It's like you have to start conversation, ask for help, ask for guidance, show what I do, and so on, and make sure you're not wasting time, but you're building certain narrative with the fund. And once you have one interested or second interested party, right, you ask for term sheet, and then the game starts. So you raise without raising, and I think it never changed. So right now, when there is this infinite capital, but distribution is a bit skewed and a bit like more strict, in later stage, which affects also earlier stage, right? You have to be careful what you do, and have to be careful how you treat, how you talk to investors and so on, and find the right time when to raise. So yeah, I think building relationships is the only advice I can give. And another important point, probably, that cadence of fundraising. So 2020, 2021, cadence was 12 months. So you would expect, I raise in 12 months. Right now, it's not the case. I think cadence is more 18 to 24 months. So when you ask for money or you build your budget, you make sure to the next milestone, you need like 18 or 24 months. That in turn means that you have to raise a bit more money. And when you have a chance, when you have an impulse, it's easier to raise more money than to do a bridge round. Because, if you see a smash car, like we have Bolt, especially in Lithuania, Prius, driving Toyota Prius, they are glued from 3 or 4 cars together. So this is like startup with 3 convertible notes. No one wants to touch it, right? So you have to make sure you don't do a mistake and raise bridge after bridge after bridge, dilute your cap table and make it toxic.
If I can. Most probably I will not say anything new. So Buildit is one of the first investors. So message to these people who are looking for their first investor, what Arvydas said, talk to the local investors. Most probably they know you, and it will be easier to fundraise. Those who already have investors, listen what these investors are telling you. If they say it will take a little bit longer time to get the next investors, most probably they are true. So that's it.
Maybe what Arvydas was saying about a big challenge on the regionality. So it used to be that, on A round forward, it's regional, and B rounds, it's the whole world is one market. And pre-seed is definitely local. But seed, I would say that it's become more regional as well. Partly because I think COVID learned us all to do deals online. But maybe as a tip for founders who are fundraising, if a VC sends partners to Tech Chill or some other events here, they are pretty likely that they are actively looking in this area. Unlike Vendep from Finland, us Trind from Estonia, we are members, partners of Stardin. So of course, that means that we are heavily investing in Latvia. We don't want to be members and say that we have 0 companies in our portfolio.
Good point. So scrape the TechChill and Latitude and Startup Fair lists. 18 to 24 months, make sure you cover that topic. Make sure you have a plan B, as Reima said, that are you going to be default alive as an optionality, as a next milestone. Is there something else that we're still missing that you see are must-haves in the startup pitch in this climate? Janiina?
Well, actually, I'm just still thinking about the previous topic, or maybe the other side of the topic. I used to be a SaaS founder myself, and I remember being so afraid of the VCs. I remember I've been pitching you. that was my scary cue. And I actually pitched to Vendep, and now I work there. I was so scared. And I kept honing the decks and trying to figure out the right buzzwords to say. And when I joined Team Vendep 2 years ago, the first 6 months was like, oh, I wish I had known. I wish I had known to be more open. Wish I had known to build an open and honest relationship with the VC. I mean, these guys, they see thousands of founders and companies every year. So they can help you. They can give you advice. They know that it's super, super hard to build a company. And you don't have to hide the challenges you're facing. They can actually help you with those. So adding to everything that we're sort of demanding to see or wanting to see is that it's okay to be human. It's okay to admit that there are some hurdles, because we know there are. And building an open and honest relationship, especially with the early stage VCs, because we invest in the team. Quite often there's not much to invest in except for the team and their ability to execute. So it's all about the relationship.
I will just add, look, some like observation, constructive feedback for the event. I don't know how many founders are there, but like I as a partner was just standing there for 2 hours in the corridor alone. It typically never happens for me. And then, you know, what kind of advice I give to you? You know, this Shia LaBeouf famous video, just do it like on the green screen. So that's what you should do. You know, just do it. Just go and start a conversation. What kind of advice I can give to you if you wake up and you wait for someone to come to you? Nothing will happen. So, you know, we can be very philosophical on our high-level stage. Yeah, do this, do that. You wake up in the morning and you relentlessly go after what you believe in and start the conversation. And don't drag it for 15 minutes if you see that the person is looking elsewhere, right? So just make an intro and then go. But if you don't make the first step, you know, I can come here with 1 billion fund and stand there for, you know, 2 days and no one comes to me, then I leave. So, you know, early stage is very different. So I completely agree with what you were saying, but if you don't make the first step, it's your journey, it's not ours. Capital is available because there are ideas, not the other way around, you know, and you should pursue the capital, but capital is there to serve you. So it's not like, you know, we are here to select and make sure and bless that you're good and you're not. It's more like how you can build this bridge to that capital that is available, and behind capital there are people. Here we are, 4 of us, 5 of us, right? We are people, first of all, and only then we manage kind of other people's money, typically our people's. And the more institutional capital you have, the less people you face, because it's some pension funds, you know, big organization. But we manage private money, which is, I think, very important. So we do have private investors that, you know, we meet them in the street. So if we invest in a company and I cannot, you know, invest in that companies and walk around in Vilnius, they're gonna beat me. So this is it.
Arvydas says, work the room. Matīss?
I have just, again, wanted to reflect what Arvydas said. If you don't want to go to talk to him, then most probably also don't take his money, because then maybe there is some problem in him or in me. Because, again, it's about relations. So if you don't like these person standing there and you think, oh, I don't want to talk to him, then most probably why to take his or her money? So again, it's not a business. These are relations, especially with early stage investors. So just my comment.
Just to make it a bit more fun, would it be so that guys have it easier to fundraise than girls because guys are used to approaching girls in the bar and they have practiced more? What do you think? Janiina.
I've approached guys in bars.
Good. Yes, there you go.
Was that the question?
If there's one takeaway from this panel, approach
actually, at the moment, I think it's easier for the girls to get the first meeting, because we understand the situation that we need more female founders, and each and every VC is looking for female founders. At the end of the day, we need to follow the expectations from our LPs, so we need to deliver those results. But we are very conscious of the situation that we need to accelerate sort of the equality, and that's why I would say that now it's girls' market.
Just to maybe build on top of that, I used to be an angel investor before moving to a VC, and at one point I was looking at my portfolio and way too many all-male teams. I need to do something. And I changed only one thing. I didn't change in the companies I invested in, but I changed that I take meetings more equally. Meaning that, of course, I was sort of benefiting women taking the meetings. But look and behold, after this day, the investments I made also reflected in my portfolio. So for my portfolio became pretty much 50-50 female teams, male teams. And I think from the VC side, the fact is that, for instance, we see 4,000 to 5,000 cases every year. We cannot meet maybe 10% of those. Yes, we gonna pass great companies already because we don't take a meeting with them because we didn't understand the reach out or the deck or whatever. But already at the moment when we are starting to decide who we meet, if we start to think about diversity or ESG or green transition or any of the other things that we need to do to answer the values that our LPs are having, that will have to change to the market.
Yeah, I think several more advices building on the top, right? So we probably, the last year was very successful, some of our portfolio companies, and we had very nice investors. And again, kind of building up on this, how, advise or what to do. So first of all, if you get no from any VC, probably you cannot say yes to everyone, right? If you get no email, don't read it. Take it and throw it into trash bin. Because if you focus on the reasons why they said no, you will never build anything. Because even if you fix that, they will never invest. So focus on the ones that says yes, or that is kind of goes into that conversation.
I will disagree heavily here. Continue if you...
Yeah, so it's like, if I would tell who said that, I think you would be out of words. Second thing is that starting or kickstarting the conversation, right? To finalize. So the ones that there are funds later stage that never says no. So, and they never say no, because once you say no, this is it. You will never get a chance to invest in the company. So again, this is very philosophical take. Secondly, is like kickstarting the conversation, right? People want to talk about themselves. So if you don't know what to ask, come to a person and say, what do you do? Who are you? And shut up. This is very important. Sales playbook 101. Ask a question and shut up. Silence is very, very, very discomforting, right? So in the silence, people just break it and start talking. And people like to talk about themselves. You'll see in 2 minutes, person will be explaining how amazing the fund is, what they do, and so on. And here you have your kickstart icebreaker conversation. And then you kind of build up on that going forward. So that just wanted to share.
So just to summarize, Arvydas is saying that many will not say even a no. Thus you're basically dragging you out?
So big funds, they don't say no, because if they say no, basically it means that it's really a no. So if they don't say no, if you kind of have very vague understanding, means that you have a chance. They want to see more traction, more something. Then you take care of what they are saying on the reasons, and they're gonna give you the reasons like why they are concerned, but they're not going to give you reasons why they said no. If they say no, this is it. Like don't look at it. Yeah, this was.
I would counter that saying.
Sorry, may I?
Just don't even a non-response like a no, maybe not yet. That's probably a no. So just move on. What do you think?
Yeah, anything other than yes is a no. But I disagree that if it's a no, the investor doesn't invest. Actually, we have significant percentages of our portfolio companies, one that we have said no. But the reason why we have said no is that, sorry, this is too early. But if you hit this and these milestones, then we are interested. And for that reason, read that feedback. What is the reason? I mean, if it's that, hey, we would want to pivot on this direction. I mean, for instance, one of my angel portfolio company pitched to Vendep. They said that, yeah, we would invest if you would scrap this marketplace logistic company or offer logistics SaaS. That's your thing. You do logistics SaaS. Exactly right thing to say, not necessarily right thing for the founders. But if it's this kind of case that not yet, then it's actually a building block for you. So, okay, what it takes to be at that stage. And when you were asking that, what would be the tip for the founders, how to prepare, what I would like to see in the pitch, I would actually like to see before the pitch that the founders would reach out too early. So many of the companies that reach out as pre-seed, we do only seed. they ask that, okay, what is required in the next stage? But then are the companies that have already built to certain direction, missed maybe 1 or 2 points that are important for us, but on their roadmap on a later stage, they sort of close the door from our investments, not tackling that item earlier, even though they could have done it. So going back to this, that, hey, we are human, you can always ask. I love when founders ask questions. So I even love that more than pitching. Pitching I actually hate. So then it's easier to find who is the right investor for you, and also see if you see the vision, see the roadmap in the same manner. There's nothing as bad as taking an investor who doesn't see your roadmap, and you end up driving the company with 2 different tracks, or trying. It doesn't happen.
I think a bit on a tangent here, because it's interesting. It is in a way a trap. I don't like disagree, but imagine this: we'll invest this and this and this and that, whatever metric. So it's like obvious. It's like obvious. If you reach this, everyone will invest. Like it's not like some kind of some complicated stuff. But where is the trap? And this is what kind of we talk with our portfolio companies kind of a lot, advising on investments, especially for later stage funds, right? Do you develop your company for investors, or you develop fundamentally after the business? And that's what I meant, like if you focus on the negative and you focus on something, it gets in your mind. And then when you make decisions operationally, you start thinking, if I do this, if I do that. Now, if investor says, yeah, it's too early right now, you come back. Imagine you do everything that is there, you come back to them and they say no. It's like, what the fuck, right? And you spend so much time and so on. So fundamentally, the only thing you care is company, and company first. And if you don't know how to build your company, you will listen to all the outside opinions, and you're gonna crash it mostly. So the only thing, like you kind of, and it's not like disagreement per se, right? But I'm trying to project this mental exercise for the founder. So I think there are funds, and I completely agree that they kind of cheer for you, they really support you, and you will notice those funds. You will notice because they'll open up a lot of resources. And look, Trind is amazing fund. They are super fast in decision making. We have 1 co-investments with Trind. Not the easiest deal, but we do have it. How fast they are making, how helpful they are, how reachable they are. This is kind of number 1. The reply from investor is very important. Vendep it's amazing fund, right? They had very big exit. They're on very good success track. I think also kind of guidance is very important, because the funds that you talk to, they have this success path, and the more success path you have, the very different relationship you build with the team, and they will gonna share all the resources and so on to guide you, help you, but not frame you. And I think, with Buildit and Matīss, it's also, I think you're older than the ecosystem in Latvia. You kind of started with seeing how everything is developing. So I remember we first came 10 years ago, I met Matīss. You were running the incubator, right? So I think it's also like super, super great partner to be with. So channel everything, put company first, work with your investors, but don't listen to super much outside opinion. That's what I meant, listening to negative feedback, or also like thinking if I do this, it will happen necessarily. You will do this and markets crash and there's no capital available. And then you burned your money doing this. So company always first, your time first, your employees first.
Matīss.
Can I go back a little bit to your question about the role of the woman in the company?
What do you think? Should we?
Thank you. Yes, 2 things. One thing, the Buildit is in the hardware business, so usually in the hardware business there are not too many women, by surprise. Previously there was a Tālis Juhnas, so we could discuss about that, why there are not too many women in the scientific field also. And then, of course, if in your team there is a woman who can pitch the idea, maybe she will earn some small bonuses just because there were 12 manfolk, and then suddenly the jury wakes up, oh, there is some woman on the stage, and at least they start to listen. So this is fun part. The serious thing is that we have experience with the teams, hardware teams, where there are only women. Also, a lot of our portfolio teams are only the man in the team. And I would say our best experience is where is the combination, because women see the world from their angle, men see the world from their angle, whatever it is. So, and in this combination, miracle happens. So that's why, if what Arvydas said, if you can make a very good teams, and you have to think about your company, and I don't suggest you just to take woman in your team just to use her that she will pitch the idea and that's it. No, indeed, find the person who can become the partner in the team. If you talk about hardware business, hardware companies where usually there are only the men. So this was my comment. Thank you. Thank you.
Reima.
Maybe Matīss said actually one really important thing about these viewpoints. And as we are consumer investors, male teams tend to solve problems of male. Female teams are more likely to solve problems for female. And if most of the founders, and when most of the founders look like this, at least after the first 5 years, for some reason they solve the problems of middle-class white male. And at the same time, if I'm looking at the amount of problems in the world, and in each problem is a business opportunity for VC, because we can fund a startup and can turn that problem into a market, I see that VC that would not have a significant share of female founders in the portfolio is missing a huge chunk of the market. I mean, prop tech, you are maybe in a different position than consumer case, but yeah, in consumer cases, we would left out 51, 52% of the market with BADideas.
So we'll invest in female founders, and we'll probably see them thrive better than male founders. You think so?
I think the market opportunity is there. The best teams always win, but if I only look at what is the amount of female entrepreneurs, so not startup entrepreneurs, but entrepreneurs, it's almost 50-50 female-male. And then startups, we see 80-something, 85 to 15. So there's a room to be done there. And as said, at the same time, that translates to, because the same problem is in every country, usually even worse, it translates to untapped opportunities.
Anything else on male-female questions?
I would just encourage female to kind of pursue this career, because we lack a different take to many problems, the approach how to do this, and you're right, there's this, especially in Europe and US, it's like more representation, more diversity. So meaning like if Nordics are pushing boards to be 50% female, everyone is taking care, especially on listed companies, on gender equality, right, on the numbers and so on. So meaning more and more equality or diversity comes into corporates that are ultimate buyers, ultimate purchasers of all the startup products. So meaning that the market is shifting towards that, and I think females are in a way, never considered in our region, probably the ability to drive the business, to be the leader, to relentlessly go after this because of natural circumstances. So I think right now it's at the time, and we really lack more female participation. And I think such as initiatives as Women Go Tech in Lithuania, that we kind of mentor and advise women to take career in tech, take career in industry, be the leader. It's not that hard, you can build a company and so on, it's teachable. The one we have a saying like, you can teach everything except attitude. So I think women have the right attitude from day one. It's just like time to go after the business. And capital is there waiting to be deployed.
Before we round up, we have been spitting out fantastic advice. At least I think we think so. What are some popular advice you guys have and girls have heard that you think is actually misleading and damaging to founders?
Too many came on the mind at the same time, but I think the build it and they come kind of thinking. So you need to be in control of your own ship in the end of the day. So just sort of trusting that you build a solution, the customer will come. You build a startup, the financiers will come. It's tougher than that.
So build it and they will not come automatically. Janiina.
Especially for the early stage founders, focus on the product market fit. Until that's verified, make no large investments on the sales or marketing. You need the product market fit to really know that you're onto something.
Arvydas.
But this is the bad advice, right? When you have to
Yeah,
sell.
what bad advice
sorry,
have you
I thought
heard?
it was a good advice.
He's for bad ideas, so he wants bad advice as well. It's logical.
Yeah. Raimonds don't steal our bad advices, you know. But okay, so I would say that one thing that typically, especially angel investors and others, is very, very bad advice is to optimize for valuation. This is the worst advice possible, right? Because you think, oh, I got the best valuation, I'm going to take after it. Look what happened in the market. All the opportunists are flushed out of the market on the investor side, right? They will never follow on, they're just underwater. So what you have to do instead of optimizing for valuation, the most important decision when fundraising is what kind of person comes onto your board with veto or negative control. So you have to build that relationship and understand. So I would say ask 5 or 6 portfolio companies, failed and successful ones, how they operate on the board, so on. Get this understanding who will be on your board with veto right, because this person might kill your company, might just be super toxic. And if you take the best valuation, what kind of, and you don't look what kind of people jump on board, right? New fund, first time, fund coming in, super aggressive, wants to get the deal, wants to get things rolling, very, very careful with valuations. Our kind of unicorn founders in Lithuania, this is kind of their take. They never take the highest bid, never take the highest bid. They take somewhere. So it's like equally pain. You don't push investors too much, but you also sacrifice a bit from the founders, and then you want the best board composition, the most aligned investor, the investor that kind of goes after your vision. You want to be with that person, not necessarily valuation, because you will go much further and you will reach much greater heights.
We'll need to wrap up. Growth or profitability? We were having this discussion. Which one should one pick?
Both, unfortunately. So still a year ago, I thought, and even advised some founders that look more on the profitability. So you don't need to, yes, you still need to be growing, but you don't need to hit that 100% still. Now it seems that if you want to raise that next round, you need to hit that 100% annual growth. But you cannot do it like you were able to do in 2021, 2020 at any price. So the burn needs to still be reasonable. So I would say that the profitability plays a role in a sense that the moonshot or loonshot cases are not funded, but also if you're growing 60%, 50% per year, it becomes difficult to get funded in that point as well. So it's not easy.
As we're wrapping up, let's do a lightning round. So what kind of critical piece of advice would you give as parting words from this stage for founders to be able to secure funding in this environment?
I will just repeat, be a cockroach or a camel. Camel is also a good, maybe better metaphor.
Fundraising is difficult, but then again, everything in startup is, so just do it. It will succeed.
Going back to what I said earlier about making sure that the VC or investor you're talking is the right investor, is that don't spam. The first contact is the most important. Don't use HubSpot to do it, because then you won't get the meeting and we might miss a wonderful, wonderful opportunity. Later on, once the relationship is there, it's okay to use automation to give some updates, but the first contact, don't use HubSpot.
If I could add, this is actually a suggestion to myself, because we also are going to fundraise. So put some limits, so or the frame, so that you will do it until whatever, I don't know, 1st of May, 2nd of June. So you have made a long list, and if on this day you will be able to say yourself, you did all you could, and you failed, that's the life. But you did all you could. So maybe you will succeed. So again, then everything was okay. So this is my suggestion to myself.
And don't do like Matīss did. Don't put the deadline at the end of the year. In January, I get half of the decks of the year, and everybody wants to close by the end of the year. I don't read them all.
Thank you. This has been fantastic energy, fantastic nuggets of thought and advice. And thank you, audience. Do we have time, Olga, for some questions? What do you think?
We will allow it, yes, but be quick, please. Sorry, the microphone, because we have people who are watching us, so yeah. Thank you.
Thank you, great presentation. So I just wanted to take a little bit personally, what are the key 3 things you seek from your perfect founder that you would be trying to take into consideration and proceed with the application? Like, what are your 3 key points you're looking into the best candidate to become a founder in your VC?
3 top qualities you look for in a founder.
Be driven in 2 ways. Do instead of talking about doing, and be data-driven.
If I may add one thing, the person can find balance between private life and the business.
So we do look for domain expertise, ability to build a product, that kind of related, and ability to build organization. So scale from 30 to 300 people.
Execution, intelligence, and knowing how to use data.
And you see, this is the point. These answers differ so much like everything else we had a discussion around, meaning that there is no, it's not like all of the investors are a fit for you. You'll have to find who is the best fit for you. And it's not written on their forehead, it's not written on their website. So you just will have to go, work through the list, work through those conversations, and not take it personally that your idea sucks. It's just not a fit.